Well, good day, subscribers, and welcome into today's video. We got a good one for you here today, talking about why the stock market and why stocks are going to be absolutely insane over the next few trading days, essentially. If you didn't know, we're kicking off earnings season this week, which is very, very exciting, and I hope you guys got your batteries recharged because, yeah, it's about to get crazy, okay? I hope you enjoy this as always. So first off here, Greenbrier, used to be called Greenbrier Industries, now called Greenbrier Companies, is reporting first thing Monday morning. They are a rail car company. If you didn't know, there's a couple companies that kind of dominate the rail car industry. One is Greenbrier Companies. Another is a company I used to own back in the day called Trinity Industries. And these companies are obviously very important because you get to understand kind of what's going on in the rail car sector. In terms of the railroads, in terms of folks that have to move product, are they ordering new rail cars? And it usually kind of gives you an understanding if the economy is bullish, right? Now, in terms of me back in the day with Trinity Industries, that was a specific play, not really on the economy, but that was a specific play around rail cars that were used for oil and gas back then, but specifically oil and transporting it from North Dakota back in the day. But yeah, that's going to give you a little bit of a good understanding of kind of where the economy's at right off the bat Monday morning. Tuesday, before the open, we have Pepsico reporting, which is very important because Pepsico, I think everybody understands, like PepsiCo is one of those companies that is an established company. It's not big growth. But if you want to talk about a company that maybe their inputs could be hurting them, maybe they have to pass it along to the consumer, I think PepsiCo is just an important company to kind of pay attention to, and they could potentially move a bunch of other of these kind of stocks that are kind of grouped together, like the Coca-Colas, the Unilevers, many other, what folks would feel are safety stocks. They kind of move as a group, and PepsiCo is going to give you kind of a good understanding there. If their profits are hurt in any major way, not only will likely PepsiCo move down, but also all the stocks that are kind of grouped in with PepsiCo will all move down as well. Then, before the bell on Wednesday, this is very important, the new CPI numbers come out, okay? Now, this is the most important thing in the entire stock market right now, okay? Basically, inflation's been out of control. I think everybody watching this video understands that, right? And the last numbers came in at 8.6%, which was a disaster for the market. That kind of shocked everybody. I mean, a lot of folks were obviously expecting these numbers to get not as bad, right? And maybe we would have been at like a 7.9% number or something like that. And unfortunately went to a new record like in the past 50 plus years, right? So complete disaster. Now, this is very important for everybody to understand this, okay? If we get a break in trend, that would be a good sign. However, there's a lot of folks and economists that aren't actually expecting a break in trend. So if we actually saw that number increase a little bit, it might not shake up the market nearly as much as you might think. Now, also don't expect the market to get too excited if, let's say, the number comes in at like an 8.2, an 8.1, an 8.3. And the reason being is the market really wants to see 2 and 3 month confirmations now at this point, because we had 1 month where the numbers went down and then they went right back up. We need to see continuous months of inflation coming down now, so that the market's likely not going to get too sad about these numbers or too excited about these numbers unless there are some freakish numbers. Like if we came in at like a 6% number, which is not happening, but if that happened, like obviously the market would shoot to the moon. And if we came in at like a 10% number in CPI, oh boy, okay, we're going to be tanking on the market. So outside of some crazy number there, even though this number is extremely important, don't expect it to actually move the market as much as you might think, unless it's way high or way low, okay? That's a big number, though. Then Delta Airlines is reporting also before the bell Wednesday. I think when it comes to Delta, guidance is going to be key. And also, like, profitability of these airlines, right? Airlines, everybody's looking at these and like, yeah, airlines are busy right now. But with a pilot shortage, with obviously what's going on with fuel prices, everything like that, everybody's kind of looking at this and like, you guys going to actually make any money on the bottom line, or what's going on with this, right? Then, if you want to know more about the economy before the bell on Wednesday, I can never pronounce this company's name right, okay? I call them Fastenal, okay? Fastenal, huge company, obviously, with the fastener business, but they also sell other products as well. This just kind of lets you know a little bit about how the construction industry is doing. And, obviously they serve, many various sectors, but this is just kind of a good one to understand where the economy's at this given moment. I'm expecting actually strong numbers out of this company, and I'm expecting strong numbers out of this company all the way basically until about the end of this year. 2023 2023 is where I'm going to start to worry about this one a bit, okay? Thursday before the bell, the PPI numbers come out. And so the PPI serves as a leading indicator for the CPI. So when producers face input inflation, the increases in production costs are passed on to retailers and consumers. The PPI also serves as a true measure of output that is not affected by consumer demand, okay? And so everybody obviously looks at the CPI number more, I feel like, consumer price index, but PPI is, it's a leading indicator. It's going to take you there because at the end of the day, think about it. Imagine you're a company that, imagine you make, trash barrels, but everything's gotten more expensive for you to make your trash barrels, right? Well, eventually you have to go up on price. That's just bottom line there. And then that ends up eventually hitting CPI, right? And so your prices go up, the PPI goes up, and then eventually you have to raise your price, and so ends up raising CPI. So yeah, that's going to be big before the bell on Thursday. Also before the bell on Thursday, and this one is huge. JP Morgan, they're reporting earnings. Obviously the biggest big dog bank of them all. I actually own this stock personally in my dividends only account. And when it comes to JP Morgan, you want to talk about, folks want to know how the economy's doing. It gets no bigger than JP Morgan. So when they report earnings, essentially, all eyes are on this, okay? In my opinion, the two biggest things for this week, CPI, and then after that, the JP Morgan earnings. Everybody's eyes are going to be on that. Where's guidance at for this company? What do they have to say about the state of the economy? Are they seeing a slowing in spending? Or, are they seeing consumers pull back? Are they worried at all about, loan losses and folks not paying bills or anything like that, right? So, obviously always the banks are very important to look at, but I just feel like JP Morgan's the next level of an important company to kind of pay attention to here, okay? Friday before the bell, Wells Fargo is reporting earnings. Now, Wells Fargo is very key, and the reason Wells Fargo is very key is not just because they're a big bank, but they're huge in the mortgage industry. And think about this for a moment, right? I think pretty much, at least if you watch my channel, you're pretty confident that the real estate industry is going to be in some tough sledding, and we're starting to get big confirmation of numbers, right? And so if you're thinking about this, Wells Fargo is the fourth biggest mortgage lender out there. They're a huge player in the mortgage market. And I don't see the mortgage market being good for the next, at least few quarters, at least into 2023, if not into 2024. I don't think the housing market's going to magically fix itself anytime soon, and I think it's just going to get worse and worse over the coming months and over the next couple quarters. And, if that plays out like that, a company like Wells Fargo's earnings are going to be hit, and in a negative way, right? And we've already seen a little hints of this before we get to these earnings, right? Wells Fargo launches new round of home lending layoffs. What's going on here, right? The staff cuts are the natural results of the cyclical changes in the broader home lending environment, Wells Fargo said in a statement, citing figures from the Mortgage Bankers Association that predicts a 40% year-over-year drop in mortgage originations to $2.4 trillion. Don't be surprised if that number gets much worse before it gets better, okay, in 2022. Further, that trade group expects 70% downturn in mortgage refinancing. I'm surprised it's only 70%. I thought it would be like 90%. I'm like, who is refinancing now at this point in time? I feel like everybody that could possibly have refied already, like refied in either 2020 or 2021 when mortgage rates were like, you could refi at like a 2.8% number, 2.7% number, 3.1% number. At this point in time, like literally, I guess you could always have a few people refinancing, but I'm amazed the numbers aren't going to be down like 90%. That's just insane to me, okay? Now, here's the deal with this week, guys, okay? This is one of those weeks that is going to not only move the market for this given week, but it'll move the market for the next couple weeks, okay? And this is such a huge week for the overall sentiment of the market. We know we are in a moment in the market where everybody is very, very scared. You see that in the AAII numbers, right? That sentiment is awful right now. Like it's hard to find people that are bullish on this market, right? And so let's imagine a couple scenarios here. Let's imagine a scenario where CPI comes in. Let's call it 8.1, 8.2. Let's say it's a situation like that, right? PPI comes in a little under expectations, and let's imagine a situation where JP Morgan basically says it's not the end of the world, right? In that scenario, this week will be a good week in the market, okay? Now, let's say we got a scenario where JP Morgan has some troublesome, let's call it that, guidance. Let's say we got a situation where, inflation comes in at a 9-point-something% number. I'm talking about CPI. That's a situation where I expect the market to sell off. Maybe not quite to lows that we were a couple weeks ago when the NASDAQ was down about 30% from the peak, or 34% from the peak. Right now, NASDAQ's down about 28% roughly from the peak. So I don't think we'd see that type of sell-off, but we would sell off into the market maybe at least a couple percent for the NASDAQ and the S&P. Now, if we got a scenario where let's say CPI comes in at 10% plus, which would be crazy disaster, okay? If CPI came in at 10% plus, the market will be back down to new lows, okay? And I hate to say that, but that's the situation and that's a big if CPI came in at 10% plus. That would be the number to make everybody flip their flapjacks and absolutely lose it. And as long as we don't have that sort of situation, we're not going to see those new lows, at least right now. Now, when Apple earnings come out, Microsoft earnings come out, Google earnings come out, and all those big guys, right? And if those were to be not quite to standard, then we could push back down to new lows in the S&P and the NASDAQ, because obviously those weights are massive. But in terms of this week being a disaster week, we'd have to see pretty much CPI come in at like a 10% type number. And I tell you, like if we came in at a 10% number, oh my gosh, like the stock market's they're gonna lose their mind. They would absolutely lose their mind in that situation. It would be hell. Okay, I'm just telling you, like the last number anybody wants to see is ever a 10% number, because then you want to talk about the Fed. What if we came in at a 10% type number? I'm telling you, the Fed would immediately likely raise interest rates in that sort of environment if we came in that insane, because that would just be like runaway inflation. And you're talking about the ramifications of 10% plus. It's just you're talking about whole different levels when you go to double digits. Then at that point in time, it's bad enough dealing with 8%. When you start talking about double digits, you're at a whole different stratosphere at that point in time. So that would be the only scenario I could see being absolute hell for the market. And I mean, you look at what's going on in some of these other places in the world. Like, I don't know if you guys keep up with some of this stuff, but like Sri Lanka, for instance, thousands of people like basically raided into the president's home in that country, and just crazy out of control inflation. The economy's tanked in some of these markets. And, obviously I'm sure you guys have seen what happened with the Boris Johnson situation, right? And all of a sudden he's resigning. So, I mean, you look at some of these things, and I mean, when you start talking about if you get into double digits, that you're getting into hyperinflation. So that's just that's a whole situation that would cause panic in the markets. If we came in a 10% plus number, I mean, you could be talking about Bitcoin pushing down under 15,000, because it would cause that much panic in the financial markets, which could basically set up another situation where you have a whole unwinding of the crypto market to a much uglier extent. So I'm not planning on that happening. I don't think that's going to happen, but I'm just telling you, if that happened, oh boy, okay? Oh boy, we're talking about new lows across the board for basically all assets. And that would just be an absolutely dramatically bad omen. So let's hope that doesn't happen. And, it's hard to think about a market that could be more fearful than the market we're currently in, when less than 20% of investors are bullish on the market for the next 6 months. I mean, it's hard to even imagine, like, could we be more fearful than that? Every time I log on YouTube, it's, videos about recessions and depression and, the stock market crash. It's going to get 50% worse, and it's going to be even, the worst ever, and all these things, right? And I'm just like, geez, could we level down to a next level of fear? And I think the one thing that could put a dagger into it and really cause that level of fear is if we came in with a double digit type percentage, CPI number. That's the thing that would just make everybody absolutely lose their flipping flapjack in mind. So yeah, let's hope that doesn't happen. I mean, unless you like good deals in the market. I mean, you know, some people might actually be wishing on that because you can get you know, better deals in the market. But geez, I mean, yeah, if we came in double digits, it would be seen as the Fed has no control, and there would be pressure that they would have to move up interest rates like 2%, 3% overnight, which would, you want to talk about the sell-off in the market at that point in time? Oh my gosh, okay, because then they wouldn't be talking about soft landing. I don't even think they'd be talking about hard landing at that point. They'd be just talking about crash landing at that point in time, man. So yeah, get ready, guys. Crazy week in the market. Hope you enjoyed this as always. Obviously, I'll keep you guys updated on everything that's going on. Much love as always. Don't forget, buy the dip and never trip, and have a great day.